After a few days of gains, Wall Street is now in suspense. The market has already digested the Fed's policy decision, so Jerome Powell's press conference is high on the agenda tonight. Market sentiment is complicated by corporate reports of the US companies with a mega market value. They are sure to influence the benchmark stock indexes. Wall Street closed in the green on Tuesday, though the major indexes traded cautiously. The Dow Jones grew by 26 points, 0.08% yesterday. The Nasdaq looked the strongest gain of 0.61%, and the S&P500 inched up by 0.28% to close at 4,567 points. The benchmark stock indexes traded under pressure in the New York pre-market today. The S&P is expected to trade in the intraday CAD between 4,480 and 4,620 points. On a Tuesday, the S&P 500 conquered a new one-year peak, and the Dow Jones had extended its winning streak to 12 sessions on the back of strong gains in the healthcare and finance sectors. The Nasdaq Tech Index closed higher on Tuesday amid investor turmoil over artificial intelligence ahead of tech companies Alphabet and Microsoft's earnings reports that will be available after the opening bell. Shares of owner Google and Windows maker rose by 0.6% and 1.7% respectively. In the economic calendar, the survey showed that consumer confidence improved to a two-year high in July on a steady optimism about the labor market, despite recession fears. Non-tech companies are also doing well as lower market growths are attracting investors. Most of the 11 major sectors of the S&P 500 came under pressure. Steel materials stocks climbed by 1.76%, following the rise in the metals prices. The trading volume was also below average. On a Wednesday, futures on Wall Street crept down. On the one hand, the market was wound down by the expectations that a rate hike by the Federal Reserve means an increase in the borrowing cost to the highest level since the global financial crisis. On the other hand, the corporate sector and the profits of Microsoft and Alphabet encouraged investors. Tesla and Netflix stumbled last week despite earnings headlines, and Microsoft joined in. Microsoft shares slipped by 3.6% in a pre-market trading after the company presented an aggressive spending plan to meet demand for its new AI-powered services and posted a weak outlook for its cloud business. In doing so, the Windows maker once again outperformed quarterly revenue and earnings estimates. Alphabet's stock jumped by 7% in the pre-market, as its results were accompanied by a surprise boost in publicity and warmer reviews for cloud operations. The company's better-than-expected quarterly earnings are indicative of the strength of the Google search, the solid growth of the cloud business, and that Alphabet is well positioned to compete with Microsoft in the AI space. The world's fourth most valuable company expanded its market capitalization by more than $100 billion. Based on the pre-market moves, its stock is up 39% this year, driven by the AI hype. Meta shares also rose by 1.8% after Alibaba's cloud arm said it would support Facebook owner Llama's open-source artificial intelligence model. Meta today is also among the companies that will report after the opening bell. In other corporate news, Coca-Cola added 1.2% after the beverage maker raised its full-year revenue and earnings forecast, betting on higher prices and strong demand for sodas. But corporate reports could take a back seat today. If the Fed makes a surprise decision, the rate-setting committee will announce its decision after the opening bell. The market will focus on a Powell speech in the press conference. If the Fed chairman surprises, then the market response may be sharp. Analysts expect Jerome Powell to remain hawkish but leave options open for another rate hike, as he has nearly 2 months of data to evaluate before the meeting on September 20. The dovish rhetoric will certainly push the stocks higher and possibly enable the Dow to rise for the 13th day in a row, the best streak since 1987. Meanwhile, the currency market is trading quietly, having pulled back from a one-year highs. The US dollar is also waiting for the Fed's verdict. The US dollar index fell by 0.14% to trade at 101.20 in the intraday corridor between 100.30 and 102.10. Amid the resilience of the U.S. economy despite Fed's aggressive monetary tightening, the U.S. dollar index rebounded from a 99.50, a 15-month low hit a week ago. Today, the index inched down, though remained not far away from a 2-month high. Today, the US dollar is sure to trade under high volatility. Besides, popular currency pairs will respond to policy decisions until the end of the week, and next week policy meetings by the Bank of England and the Reserve Bank of Australia will serve as market catalysts. In this context, popular currency pairs traded sluggishly in a midday, except for the Australian dollar. The Aussie sank by 0.8% in light of a softer-than-expected inflation data in Australia. It means that the central bank could refrain from raising interest rates on August 1. The Canadian dollar is given in to its American rival. The USD CAD pair climbed by 0.45% intraday to trade at 1.3225. The instrument is likely to trade in the intraday corridor between 1.3160 and 1.3290. Oil prices declined today ahead of the Fed's policy announcement and amid the fresh evidence of expanding oil inventories in the United States. Brent crude futures slipped by 1.2% to trade at $82.75 a barrel. WTI futures dropped by 0.8%. Yesterday, both benchmark rates reached the highest levels in 3 months. At the same time, oil prices have been rising for 4 weeks thanks to OPEC production cuts and promises from the Chinese authorities to strengthen the world's second-largest economy. Oil prices reflect sentiment as the market is trying to strike the balance between contracting global supply and fears of waning demand due to the global economic slowdown. Still, there is a potential for oil growth, although prices cannot avoid volatility in the coming days. The loonie is also set for higher volatility. The crypto market is trading with the same sentiment as yesterday. Popular tokens are trading lower at the levels of yesterday, having inched up by 0.12%. Bitcoin is now trading at about 29,200. As for altcoins, Ethereum, Ripple, Cardano, and Binance shed from 0.2% to 1.4%. After they fall, Solana and Litecoin rebounded by 0.3% and 5.4% respectively. Today, the crypto market may recall the inverse correlation of Bitcoin and the US dollar index. The nebula of the future in the crypto industry is putting pressure on assets. On Wednesday and Thursday, congressional committees are voting on several items of legislation. Among them is a bill defining cryptocurrency as a security and a commodity, and another establishing the regulation for the supervision of stable coins. The Republican chairman of the Finance Committee said that his priority is to advance legislation that would expand the Commodity Futures Trading Commission's supervision of the industry, as well as clarify the jurisdiction of the Securities and Exchange Commission. But it remains to be seen if the bills will gain any support in the Democratic-led Senate, where the head of the Banking Committee said he was unsure if additional legislation was needed to regulate cryptocurrencies. The intraday outlook for Bitcoin is as follows. The price is clinging to support at 29,200, and today the crypto could gain fresh impetus after the Fed's policy meeting. If Jerome Powell sticks to dovish rhetoric, the token has a fair chance to recover to 30,200. Alternatively, hawkish rhetoric would push the price down to 28,400. And that's all for now. Hit the subscribe button and keep close tabs on the market developments. We are waiting for your questions and comments, and see you!